Hello everyone, this is Jeanette Van Dyke and I'm going to be going over problem 12-11A tonight. Bear with me, there's a lot of information in this, so we're going to go ahead and just start looking at this. This is the comparative balance sheets for Colorado Industries as of December 31st. So it starts out here giving us the balance sheet, and we have information for 2017 and 2016, which is going to be very important to us throughout this entire process. And we also have liabilities and stockholders' equity down here. And then we're provided additional information which we're going to be putting into the statement of cash flows as we go. So what I did to start with, because we do need to know the differences between these values for the two separate years, I went ahead and did that for us over here in my Excel spreadsheet. And I just added an additional column that shows us the difference between the values. So you see we had a positive difference for the cash, a negative balance on cash on accounts receivable, positive for inventory, negative for prepaid insurance or expenses, positive for land, no changes in building, accumulated depreciation for buildings was negative, equipment was a positive change, accumulated depreciation on equipment was a negative change. So we see that there are differences. Now, because it is positive or negative in the difference doesn't mean that you're going to input that value positive or negative into the problem. We need to remember the debits and credits for each account. So a cash account usually has a normal debit balance. If we are paying something out, we are crediting cash, so that would be a negative on here. So even if there is a positive difference in an account, we need to remember what the original balance is on that account, whether it's a debit or a credit for the regular balance. So let's get started here. I'm sorry, bear with me. So we need to start by choosing the year for the year ending in December 31st, 2017. I do apologize. I tried to copy and paste this into Excel, but it wouldn't do it properly. So perhaps someone can share that trick with me, but I couldn't get it to work. So we're going to begin with our net income, which was provided up here. Net income for 2017 was $41,847. So we're going to start by adding in our net income. Next, we are going to make adjustments to reconcile net income, net cash provided by operating activities. So the first value we're going to input is our depreciation expense was $47,502. which was also provided up here, $47,502. Next, we're going to go to decrease in accounts receivable. So we know it's a decrease in accounts receivable because we did our little spreadsheet here. So we know that accounts receivable was a negative $9,048. Again, we need to remember the original debit and credit balances of these accounts. So that's actually going to be input as a positive number. Next, we're going to go to increase in inventory. Again, it was a positive number here, but again, we need to remember the normal balance of these accounts. So for inventory, that is going to be input as a negative number. Because it was an increase in inventory, we paid out more money. So we ended up actually crediting cash when we purchased that product. So that's why this becomes a negative number. Next is going to be decrease in prepaid expenses. So that is $6,469, which we get from here. Prepaid expenses was $17,282 in 2017 and $23,751 in 2016. So then the difference was at negative $6,469. After prepaid expenses, which remember is a positive input even though it was a negative value, is increase in accounts payable. So we're going to go over here to accounts payable, which is in liabilities and stockholders' equity, and we see the difference right here between these two values was $9,874. So the last one here is loss on disposal of plant assets, and this one is a little trickier. So where we need to get the information to find this value is up here. So equipment was purchased for $104,000 $104,052, excuse me. In addition, equipment cost $24,882 with a book value of $11,310 and sold for $9,048. So what we are looking for here is the difference between book value and what we actually received in cash. And that is going to give us the loss on disposal of assets. And I worked that out over here so it's easy for you to see. So loss on disposal of assets is going to be your book value minus the cash received from the sale. And that's going to give us the loss that the company is going to take on those assets. So that's $2,262. So after all that, we need to get the sum of these values, which ends up being $64,467. We're going to add that to the original $41,847 of net income to get net cash provided by operating activities of $106,314, excuse me. So then we're going to move on next to cash flows from investing activities. So we're going to start with sale of land. So this one is going to be a little more complicated. I'm going to bring it back over here. So to get the sale of land value, we need to start with the value of the land in 2016, add the additional land purchase, which I will show you in a moment, and reduce the value of the land in 2017. So I worked out the math here. So here's the value in 2016. Here is the additional land purchases that we made, $45,240. Here's the value of the land in 2017. And this is the sale of the land. This is the value. So let's go up here and show you. So here are our values for 2016 and 2017. Excuse me, I'm looking for the other value for the land. Sorry about that. So the other value for the land was right here. So we ended up purchasing that land with shares of common stock. But we did purchase land worth $45,240. So all the information we need to complete that is all contained right here between land for the 2 years and the value of the additional purchase of land right here. So that's going to get you the $28,275. And let's move on. So next we have the purchase of equipment. So this is going to end up being a negative value because we are spending money. Lots and lots of spending money. So that information was provided right up in here. Equipment was purchased for $104,052. So again, this is a negative amount because we are spending cash. So we are going to credit that cash account. So that is going to be a negative value in here. The next is sale of equipment. So on the sale of equipment, we just use that value up here. So that is the $9,048 that we received for the sale of that equipment that we took a loss on. So you're going to put your $9,048 in here. Then we are going to get your net cash used by investing activities by getting the sum of these three values. Now it's net cash used instead of net cash provided because it is a negative value. We used this much cash, so we're not bringing in extra. So next we're going to get the cash flows from financing activities. We happen to pay dividends, so again we spent cash, so it's going to be a negative value of $13,572, which is up here for dividends. So we need to keep a good eye on this information. This is where a lot of the info we're going to get is $13,572. Those are our dividends. So we're going to get a net increase in cash by summing up all of our values over here. So we have net cash provided by operating activities minus net cash used by investing activities minus our payment of dividends. So that's going to get us our net increase of cash of $26,013. So the next two values we're going to need, the cash at the beginning of the period and the cash at the end of the period, again are provided up here. So beginning is 2016, end of the period is 2017. And at the very end, we have the land acquired by issuance of common stock. Again, we've already looked at this value once to get the additional land purchased. So now we're going to account for that money for the common stock. So it was $45,240, which we're going to input here. And that should get you all the information that you need to complete this. I'm sorry if it was a little choppy, but there was a lot of information to go over, so I hope it was helpful.